Well, one of the reasons, in fact, that we have a lot less money to pay for programs now is that we cut taxes substantially, federally, starting in 2000. Well, it's been going on for the last 15 or 20 years. If we start the clock, say in 2006, for instance, the last decade, we've cut back across the board on personal income taxes, on consumption taxes, as well as on business taxes. And that reduction has meant that we have about in the neighborhood of $40 to $50 billion less a year to spend on programs or to cover a shortfall in expenditures. And so a big portion of that has gone to the corporate sector, as you suggest. So it's been actually a revolution in corporate taxation in Canada. Most Canadians don't understand that corporate taxes at the federal level have been cut in half over the last 20 years. Just a dramatic change in how we tax in Canada. And the benefits of that have gone to the corporate sector in terms of reduced taxation. Now, the idea behind this, or what was sold to governments by corporations, was that they would take this additional money that they didn't have to pay in tax, and they would put it in expenditures of their own. So they would put it into training their employees, into building new factories, and increasing the productivity of the economy. That was the promise. So we've run this experiment for 20 years to see what will they do with that money. And it turns out that at the same time that corporate rates were going down, business investment was also going down. Remember, that was the opposite of what they promised. They promised to increase investment, and instead of taking that money and spending it on building more factories, improving productivity, they took the money primarily and put it into their bank accounts. And what that's led to is a historic high level of corporate cash. So the corporate sector is sitting on close to $700 billion in cash in their bank accounts, which is actually more now than the federal debt or all of the provinces put together, all the debt from all the provinces put together. So it's an incredible amount of money. And particularly at a time where we have slow economic growth, it's an incredible waste of money, because had governments, instead of giving corporations a tax cut, taken that money and spent it on programs, on healthcare, on education, for instance, we likely would have seen a much bigger increase in economic growth, because those resources aren't sitting in a bank account, they're instead being spent in the economy.
And so what kind of consequences do we see then by giving banks these large sums of money and corporations? Is this detrimental to the economy in the long term, or how do you see that going forward?
Well, certainly it's a huge wasted opportunity to provide economic growth. So corporations have been given this money, they're in great shape. So they have substantial cash reserves that they could use at any time to build new factories, train their employees, increase productivity, buy new computers. They can do that at any time. But they've decided not to do that. And because we're unwilling to raise the rates on corporations, at least federally, what that means is that money is out of play. So it can't be used in the economy to increase economic growth. And that's unfortunate, because post 2009, the big recession in 2009, we've continually experienced slow growth. So we're not at, about 3% real growth, which is what you might expect. The expectation now is that has been reduced to about 2% of GDP, so a huge real decrease in the amount of GDP that we think is even possible from the Canadian economy now. And this slow growth is resulting in a technical recession like we had earlier this year. It wasn't a terrifically deep recession, but it's endemic of this larger issue, which is that we have chronic slow growth in Canada. One of the reasons why is we have big stocks of money that might have otherwise been spent in the economy sitting in the coffers of corporate Canada, and they're unwilling to spend it. And part of the reason why they're unwilling to spend it is because economic growth is poor, and so you get this cycle that we provide more tax cuts to corporations, they decide not to spend that money, therefore we get less growth, therefore they decide not to invest. And so it's a detrimental cycle that I think one of the ways we could get out of it is to increase corporate income tax rates with the purpose of spending that money in the economy, attempting to drive up our growth.